Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, I really wanted to jump on and just talk to you guys about the market and give you guys my honest opinion and the truth behind a crash. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you have any questions, concerns, ask them down below. So starting off, kind of what is a stock market crash, right? A stock market crash is pretty much when the general market falls more than 20% in value, right? The last one we saw was March of 2020. During all the lockdowns, there was a ton of fear and emotion, and people didn't know what was kind of going on with the market, right? And with the economy causing everything to get slammed. Once people realized, okay, it's not as bad. Maybe there's certain tech stocks that are actually doing very, very well. And the beauty of it is the government funded pretty much everything. They dumped trillions of dollars back into the economy to kind of keep it afloat until people got back on their feet and people started going out. And when they did that, it was a great thing for that time, right? It got people spending money, which overall kept some jobs, and it was a great thing. Not to mention they did lower interest rates. And anytime you have low interest rates, that becomes it becomes easier for people to borrow money, and anytime you have easier access to money, that's overall going to keep the economy afloat. And that's kind of what we've seen. We saw this huge sell-off, and really the market started hitting highs within 6 months. And then, you know, as of today and over the past couple of months, since pretty much the 1st of January, we've seen just this steady decline in the market. And as of right now, the stock market has fallen right at about 17%. So technically, we are not in a crash. We're in a possible correction. A correction is only when it falls 10%. Okay, so why do people freak out about a crash? At the end of the day, because emotion, right? When you see your money and your account balance and you see volatility in your account, the first thing you want to do is sell. You want to get out so you don't have to worry about it. And I definitely think, and I understand where these people are coming from, but on the flip side, you should have almost the opposite effect. Why would you ever want to sell your stock at lows? Why wouldn't you want to sell it at highs and try to buy the lows? And that's kind of the mindset I've seen, right? We've seen companies like Tesla fall more than 40% in value, and people are freaking out stating that this thing is super, overvalued even now, and this thing's going to $400. Great. If that stock goes to $400, I'm going to be buying up as much as I possibly can. Tesla brings in $18 billion and is doing very well, growing at 50 to 60%. Another thing, Apple falling, upwards of right at about 15%. A company that has hundreds of billions of dollars in cash, selling off and has great earnings. So you have to go into a crash with, okay, right? I understand that this is a temporary issue. I am just gonna close my eyes and continue to invest. And that's where you make your money. At the end of the day, when you guys are buying at those dips, you're gonna be making so much money when the market recovers, and it's always recovered. There has never been a time in the United States where the stock market has not recovered, as long as you're a long-term investor. Yes, we've gone through times where there's been sell-offs and consolidation for a year, 2 years, 3 years, but as long as you have a long-term outlook, you will be fine. And if you would have invested in 2007, right before the massive 2008 crash, guys, right now you're up on your money. If you would have invested in 1920, you're up on your money. As long as you have that long-term outlook, you guys will be okay. And you should look at crashes as more of an opportunity rather than like a fearful side. Look at it as kind of like, okay, I'm gonna buy as much as I can, hold it, and not even look at it. And you don't have to buy it at these peak bottoms. What I do is a strategy called dollar cost averaging. You just continually invest, and anytime the market sells off more than 4 to 6%, I double what I normally will put in, because I understand the ROI is there. So once this recovers, I'm gonna make a lot of money off it. And I definitely think, guys, yes, you should have the approach of long term. And if you don't, should you invest right now? Of course. There's no better time to invest than the present, right? The best time to plant a tree would have been 20 years ago. The best time to plant a tree right now is today, because you look back in 20 years and wish you would have done it. And I think that investing is the same thing. You have to look at everything with a long-term outlook, not even touch it, and you guys will be all right, you guys. But overall, that is it. That's kind of what I wanted to talk to you guys about. Hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, guys, stay positive, and stay safe. We'll see you later. Take care.